Hello guys, today we embark on a journey to uncover the secrets of making money on the stock market. Yes, a realm where fortunes are made and dreams take flight. But first, in this channel we don't like to give the viewers the fish, instead we prefer to teach you how to fish and what that means. We are not giving you a simple answer or where you should do to make money. Instead, we will talk about a strategy that have proven from in the last few years to have really good results. Are you curious about that? Let's watch this video. So first, a secret. There is no secret about making money in the stock market. Instead, in this video I want to talk about one particular strategy that it's called ETFs. What is an ETF? An ETF or exchange traded funds are baskets of security that track a specific market index, sector or commodity. But what is an ETF or what ETF should I have? I have one word for that. First, you have to understand the S&P 500. What is the S&P 500? The S&P 500 is basically a barometer of the American economy. It consists in the 500 largest cap companies listed in the stock exchange in the United States. It serves as a benchmark for the overall performance of the stock market. It mirrors its ups and downs in the economy or the value of the companies. And investing in the S&P 500 have a lot of benefits. It offers a diversified approach, spreading your risk across a wide range of industries and companies. Since if you look into the 500 biggest companies in the United States, there are a lot of different companies out there. But how can I invest in that index or that? Then you have to have your account in a broker, and you have to look into the specific ETF. But what is the best ETF? Personally, if you are a beginner or if you are an expert or an advanced investor, investing in an ETF, a low-cost ETF specifically of the S&P 500, has a proven record that it's difficult to beat. Did you know that 90% of index of funds on America doesn't beat the S&P 500 index, for example? Sometimes a lot of American investors are investing in the stock market in different types of funds, and they are paying high fees and they are not beating the S&P 500 ETF, for example. And in the long run, in the long term, it has proven that it's not the best strategy to hold. So if you instead invest in a low-cost ETF like the S&P 500, but what should be the ETF I should buy? Personally, I will suggest you should buy the low-cost one. My favorite is VOO, the Vanguard ETF that mirrors the S&P 500. And that's because it only has an expense ratio of 0.03. Personally, I do believe you should invest in a low-cost ETF that has an expense ratio under 0.1%. If you look, there are a bunch of ETFs. This is the largest one, for example. I do really like SPY and VOO because it's the low-cost ones that mirrors the S&P 500. If you want a little more risk but a little bit of more upside, for example, you have the QQQ that mirrors the Nasdaq index. It's an index that has basically more tech companies and high-growing companies, for example. But this is your assess. You have to look into what are your risks or what you want for your future, what are your goals for the future. But this is another conversation for another time. But this is a proven strategy, and even if you are an advanced investor, experienced one, or if you are a beginning, I've started owning index exchange traded funds. For example, I did own QQQs, the SPY, for example, and I do believe it's the best choice. You will be not paying higher fees. You'll be mirroring the S&P 500 uh, performance, for example, and it's really difficult to beat the S&P 500 if you look into the historical returns. For example, most of the years the S&P 500 is up. You can see the up and downs in the last few years. There are some years that are down. So we have crises, wars, bubbles that turns out to be bad years for the stock market, but they always recover. And if you are a long-term investor, as you should be, that's the secret. For me, the best strategy that you can have for an investment is to have a long-term horizon, invest your money, dollar cost average, always invest every year, every month, every week with the money that left from your salary, for example, and invest for the long term in a low cost ETF, for example, like the SPY of VOO that mirrors the S&P 500. But it is really difficult. Historically, the S&P 500 have returned around 9-10% per year. There are not much investments you can talk that beats that performance. Actually, if you investing in stocks, it's the investment that have higher returns if you compare to gold, treasuries, staying in cash. Any of that type of investment beats the investing in the stock market, and the S&P 500 it's one of the most diversified and most proven strategies that we have the possibility to do so. You for example, you can look at this graph that has like 150 years, and the stock is in the long term it's always going up, returning at an average of 10% per year. But there are times that the stock didn't perform well. For example, we crossed all world wars, inflation times, bubbles, the 2000 bubbles, great financial crisis. There are periods, even decades, that the stock goes nowhere. For example, in the 2000s we had the bubble in the 2000, and we had the great financial crisis in 2008, and during that time the stock didn't perform any gains if you have invested in the year of 2000, for example, where the tech bubble pops. But in the long term, if you are patient, if you want to, it's in the period that it's darker, in the Great Depressions, in World War Wars, in when bubbles pop, when the stock is down. That's the time you should invest more, and so you can outperform the stock market. For example, if you invested in the year of 2008, you have a really good performance until now, for example. And at that time, 2009, no one wanted to touch stocks because that was a crisis. It's difficult to have money, and it was really difficult to be bullish in the stock market. But that's how you should train your psychology, and be brave when you should be. That's not when the stock is booming. When we are in the bubble, when everyone is talking about stocks, that's easy to invest, but it's not the best strategy. You should be buying stocks, for example, and everyone is afraid, and no one wants to own stocks, because when no one wants to own stocks, that's when they are disposal. They have the ability, not the ability, but they don't mind to sell their stocks at a cheap price, and that's when you want to buy, because if you buy stocks at a cheaper price, your returns in the future will be higher, and that's the strategy. But at the moment, why you don't own an ETF of VOO or SPY? Actually, I don't own anymore, but in the beginning I started owning them, and I do believe it's the best strategy for almost everyone. But at the moment, I want a challenge to beat the market. That's why I don't own it, because I'm already investing in the stock market for a few years. I'm always studying. I'm always trying to improve my process, and I want to be a stock picking investor. I want to beat S&P 500. My main goal of this channel and with my investments, it's not to beat like other fund stock, to beat the index, or the world index, or the S&P 500. I want to beat the world index, the S&P 500, and the Nasdaq index. For example, I want to beat all three and have high returns. Of course, I will not talk about a number that I want to return 15% a year, because I don't think it's the right way to say that, because if the market is down 10%, we will not do a 15% returns. For example, if you only lost 5%, or if you stay at the same, it is a outperformance of the market. And when the stock, for example, the S&P 500 returns 20%, I want to return more than that. You always have to compare the market, because if the market is on crisis or is going down, of course you will go down with them. It's really difficult to not go down with the market, but I always want to outperform the market every year from now. So that's what I do personally, and investing in a low cost ETF for the long run, like a VOO, SPY, or even in QQQ, for if you want to mirror the Nasdaq invest. It's one of the best proven strategies out there, and even if you are a beginner or an advanced investor, everyone should try that strategy, because it is one of the best. And even the biggest funds out there, if you look into the funds in the United States, 90% can't beat a low cost ETF in the S&P 500, for example. And that's what I have to talk to you guys today. That is my strategy to beat and earn money in the stock market, and I hope this is one of the best strategies out there. So I hope you find this video useful, and I hope you liked it, guys, and please subscribe. Bye.